Natural gas just crashed to the lowest price on record. If you own natural gas mineral rights, you better hold on to your shirt or you might lose it. Today, we're talking about what this price crash means for you as a mineral owner and how it's going to impact your royalty checks. Make sure you stay tuned until the end of this video because I'm going to give you my thoughts on when we can expect natural gas prices and your royalty checks to recover. Howdy folks, my name is Steven Hatcher and I'm the creator of Minerals Guy. I'm a professional mineral buyer and oil and gas attorney, and I have over a decade of experience buying, selling, and developing oil and gas properties all across the country. On this channel, we share tips on minerals management, mineral valuation, and how to achieve maximum value for your mineral rights. So just last week, natural gas prices reached a low of $1.57 per MMBTU. That's down over 35% from 2023 and over 75% from the average that we saw in 2022. On an inflation-adjusted basis, this is the lowest price of all time. This means if you were making $4,000 a month in royalty income in 2022, based on price alone, your check today is gonna be about $1,000 a month. And when you consider natural well decline from 2022, your checks are most likely gonna be even lower than that. Now, if you've owned mineral rights for a while, then you know to expect volatility. Crude oil and natural gas are two of the most volatile asset classes out there. But this is just crazy. Talk about a roller coaster. And this is the reason that I tell folks that if you're gonna hold minerals for the long term, don't change your lifestyle just because you get a few new wells and a few big checks. So what caused the price crash? I'm gonna drop a link in the comments below to a really good Wall Street Journal article that talks about this exact topic. But the crash happened for two primary reasons. The first, an unusually warm winter, and the second, roaring US output. So normally, natural gas prices go up in the winter due to heating demand. But because this winter has been pretty much non-existent across much of the country, natural gas inventories are very high for this time of year, at over 20% above the 5-year average. Additionally, US shale producers are notorious for over-drilling and flooding the market with supply. And here we go again. Producers like Chesapeake Energy are finally starting to respond by slashing rigs and output. But it's gonna take some time before we see a price response. While this is really good for the US consumer and the broader economy, this is really bad for mineral owners and domestic natural gas producers. So now that I've delivered the bad news, when is it gonna get better? Well, one of the things that we say in the industry is that the cure for low prices is low prices. That means that eventually we'll see a supply response to low prices from reduced drilling. Eventually, all of the excess supply will work its way out of the system and we'll see prices start to recover. The ramp in US LNG exports will also help to reduce this inventory by creating new demand for US natural gas. But when is this gonna happen? A lot of really smart folks are saying that it could take a year or more for this inventory to ease and that prices could go even lower in the short term. So it could be 2025 and beyond before we see a meaningful recovery in natural gas prices. So what does this mean for natural gas royalty owners? It means that if you're a long-term holder of minerals, you better batten down the hatches and get ready for some really low royalty checks. But there is some hope on the horizon. If you need liquidity now, selling is always an option. The natural gas strip is currently in contango, which means that the market price for natural gas is higher in future years than it is today. And because most sophisticated mineral buyers, including myself, use the strip to model the value of your minerals, sale prices can still be pretty compelling. And if you want to know the true value of your mineral rights, click the link below and get in touch.